Welcome to Dollars and Cents with Friedman Financial, the home for financial advice in a language you can understand. Created by Mark Friedman of Friedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Friedman Financial.
Welcome back to another edition of Dollars and Cents with Friedman Financial. My name is Mark Friedman.
And I'm Christian Karcher.
And we're here to provide you with some financial advice in a language you can understand. We are in the week of the start of the NBA Finals this week, right?
That is correct.
And surprisingly, the New York Knicks beat it was surprising to me, at least. I don't know, was it surprising to you?
I don't know. It's basketball. It can go one way or the other. They're both very good teams. We'll see what happens.
Yeah, I kind of want the Knicks to lose, but...
I don't.
Well, that's because I'm an East Coast guy and I'm a Celtics guy. But I would love to see San Antonio win, and I still think they're going to. But what do I know? We're only one game in following this little podcast. But there's been a lot of stuff that's been going on in the world. A lot of news, both domestically. A lot of it has to do with elections and all that kind of stuff. But there's a war that's going on. There's gas prices that are up pretty high. Meat prices are expensive. Have you tried to buy meat lately? Beef? That can be pretty steep. But generally, what's interesting is from our client's perspective, the economy is not so bad. Yet, if you listen to the news and you listen to publications, people will lead you to believe that the economy is really suffering. And you know what? For some, it is.
Absolutely. I mean, everyone's financial situation is a little bit different. And so what we have to do with our clients is say, okay, there's all these things going around us. What are the things you can control within your financial life, so that we can start making that plan to work for you? Yeah,
because look, I feel very fortunate that we are in we have a slice of the population of our clients who are not. I would not call them super wealthy, not by it depends on what somebody even calls wealthy. What's high net worth? What's wealthy? Yeah. But these clients have positive cash flow, more money coming in than is going out. I think that's a very positive thing to say, and they can cover their day-to-day expenses where the vast majority of the population oftentimes can't. They're living paycheck to the paycheck, or just you miss a paycheck or two and
it becomes a
problem, right? And then there's another segment of the population that are retired that live exclusively on a Social Security check.
Absolutely. And so, a lot of our clients are shocked to hear where they fall in the grand scheme of the population around us. Part of that is being in New England, which is just a bit more affluent part of the country. But it is a bit of a reality check to say, not everyone is in the exact same financial position as you are, the client.
But because of the use of social media, the television, however you choose to get your information, there have become some financial pundits that are out there. Take Dave Ramsey, take Susie Orman, take some of the others that are out there, or even just self-proclaimed influencers who want to provide information.
Well, have you ever seen Caleb Hammermark? This is the...
No, I'm not familiar with that one.
He's for the younger generation. Oh, okay. And he's like Dave Ramsey, except for he yells at people about buying too many taquitos.
Taquitos?
Yes.
What's a taquito?
It's like a tortilla rolled up with chicken in it. It's a great snack, but he gets very upset when people buy taquitos at the grocery store for twice the price.
All right, well, I get that. That's all good information. The point that we're trying to make, though, is that so many people rely on the information, the advice, the sound bites that they get from these financial pundits, and I guess we're kind of part of that, Christian, because we're doing a podcast ourselves.
Absolutely.
So let's put that all in perspective. And they take a lot of the information that they get and say, well, because Dave said this or because Susie said it, it must apply to me this way. And when it comes to our clients who bring this information to us, we sometimes have to give them a little bit of a wake-up call that says, Susie's not talking to you. Dave's not talking to you.
Right. Dave and Susie are talking to the widest amount of audience that they can. And so they provide rules and tricks and easy gimmicks to think about your finances. Very often, these are directionally great advice. Things like, don't get into credit card debt. Okay, that's directionally great advice. But sometimes, Dave will tell you, never use a credit card. Well, if you're a smart person who has positive cash flow and you use a credit card to get points or miles to help pay for trips, well, that's actually a very good financial decision.
Right.
And so the question becomes, who are they speaking to, and who is speaking to you about your financial plan with a true understanding of where everything is, what everything's worth, what your cash flow looks like, and what actually makes sense for you to be doing financially.
Yeah, I mean, everybody comes. Look, my niece called me a couple weeks ago, and she says to me, Uncle Mark, I've had this account with a broker, and this broker wants me to move into this investment strategy, but it's going to cost me fees and charges. And I've been reading on ChatGPT that I shouldn't pay fees, that I shouldn't pay for anything, and I should buy the lowest cost possible everything. And there's some sense to that. You want to try to find something that's the most reasonable cost. But if you want to work with a financial advisor, should they work for free? I mean, they're going to charge a fee. Mm-hmm. And by the way, and I told her, look, we can offer you, you're my niece, we can work something out. But the mutual funds, the exchange traded funds, the investments that we're going to be buying for you, they're going to have internal fees. Well, I don't want to pay those. Well, businesses have to operate with expenses. And just so you can say, well, I don't want to pay any fees. She called me up and she said, Mark, or Uncle Mark, my account got closed out of this company and they charged me $36 to close the account. I'm going to call them back and I'm going to yell, I want my $36 back. That's part of doing business, right?
That's right. You have to think about it as there are expenses associated with, opening accounts, the maintenance of accounts. In this world, everything's become so commoditized on the investment side where people say, okay, we're going to try to get it lowest cost. While they do that, sometimes they strip out some of the service and the ancillary pieces that provide the value.
Look, if you just want to deal with investing, right now, unlike 20 years ago, even 10 years ago, you can download online apps and you can buy your own individual stocks. You can buy your own exchange traded funds, mutual funds. You can buy whatever you want through these portals. You can go to a Schwab or a Fidelity and do it on your own. But that leaves you alone out there. And if you're taking the advice from a Dave Ramsey or a Susie Orman to say, well, Susie said this or Kramer said this, and you're taking the advice, they don't tell you when to get out or when to get in or what to do when mom passes away or your daughter is in debt or you have to help out this person. They're not there to answer those questions. You have to try to figure that out. And what are you supposed to do? Wait for the next episode? Keep your fingers crossed that Dave Ramsey will talk about that particular topic next time?
Right. Or you go looking for videos and you might find people who are, making videos on YouTube or writing articles who might be qualified, might not be qualified. You really never know. But they'll be giving generic advice, like I said, to the masses. They don't know about your situation. They don't know about, we were just talking to someone recently who had just watched a video about the different, not stages of retirement, but sections of retirement based on how much you've saved. Mm-hmm. And he's asking, how does this apply to him? And we're looking at it and we're going, well, in this video, they are talking exclusively about if you have between this amount and this amount in your 401k plan. And that's all you have saved. And we looked at him and we said, half of your money is in a non-retirement account. You just inherited this money. And it's now, because there was a step up in basis, almost tax-free. You can reallocate it how you want. You can draw money as you need. Your situation is much different than someone who just has the same amount of money you have, but in a 401k plan.
Yeah.
And we need a plan around that. And that's the value that we have to bring when we're thinking about that financial
Right.
plan.
I mean, I can't tell you how many times I find on my Facebook or Instagram feed an AI-generated report that says, these are the top 10 stocks to own for the next 10 years. Now, am I supposed to go out and buy those 10? I mean, there are people that are doing that. They're looking at that. They say, well, these are the ones. These are the ones. Look, you've just heard about this company, Marvel, for instance. Perhaps you caught that Jensen Huang from NVIDIA
Yeah.
talked about this could be the next $1 trillion company. And just because he said that, the stock jumps up 30%. And then it jumps up 30%. And then it makes the news that Jensen or whatever his name is, says that the stock could be the next $1 trillion company. And now all of a sudden people want to buy that stock. Is that the right time to be buying those things? I mean, just because of a soundbite, no, that's not how it works.
Right. You do see these cycles throughout the markets where one sector or one industry, even as limited as, nuclear power, or for a while there was a big, when cannabis was becoming legalized. There were all these ETFs that said, oh, we're going to buy all of the cannabis stocks. And guess what? That creates these rushes of money into these spaces where all of a sudden you get valuations that are very disconnected from what the true companies are underneath.
Yeah, I mean, the news cycle shifts all the time. We've had periods of time when precious metals were what everybody was talking about, how well that was going to do. Cryptocurrencies, all sorts of different types of investments. And fortunately, at Friedman Financial, we have been very committed and very rational with building an investment strategy, building a plan for our clients that says, let's build this to be evergreen as best we can, right? Understanding that there's going to be tweaks along the way, but not trying to be tactical. And I think that's what many people have to ask themselves when they start to hear all these advice offerings that come through social media is, do you want to be strategic or do you want to be tactical?
Yeah, and I think, like you said, we think strategically and we think long term. And so we say, if we can create a portfolio which, if we look back historically, can help you meet your goals 95% of the time. We'll run some scenarios, figure out what it looks like. Why would we try to be taking the risk to jump on the next big thing and be tactical and jumping in and out? We know this strategy will work because at the end of the day, your goal isn't necessarily to make the most money possible. I mean, in a lot of cases it is. But your goal is to be able to continue to spend as you're spending today, live the lifestyle you want to, be generous with who you want to be generous with, and spend and enjoy your life with the money you've saved from all those years of saving.
Yeah, I just find it amazing as people invest, when we're building our investment portfolios, we're building them for 5 years, 10 years, 25 years, 40, 50 years. And all of a sudden you're having a really good year in a particular investment. And our recommendation might be if you come to us and say, hey, I need $25,000, whatever the number is. We say, well, let's take a little bit off the top here, something that you're making some money on. And you, oh, I don't want to do that. Look how much money I'd have to pay in taxes if I were to sell this. But then all of a sudden, this fund that was doing well or investment that was doing well, a year later is now down. And you come to us and say, oh, we got to get rid of this investment. And you weren't willing to pay taxes when it was up, but now that it's down, you're willing to say, okay, I'll take what was a paper loss, but not have to pay much. It's irrational. And that's what we try to do is try to train you to not be irrational.
Right. We remain rational in irrational times with irrational decisions.
That's absolutely right. So, I want you to just be careful. The more and more the market does well, you are going to find everybody that's out there that has a new strategy, a new way to invest money, a new thing to do. Or if the market's doing poorly, there's usually another asset class or another style of investing that will say, well, this has been lousy for you, but maybe take a look at this investment. Relax. If you have a well-balanced portfolio over time, you're going to do fine. If you're disciplined to continuing to put money aside, regular basis, 401k, Roth 401k, personal savings, whatever it is, you're in good shape. Look, I mean, what if we would have a rule of thumb? And I hate rules of thumb, but if people are saving or earning money right now, Christian, what percent of their gross pay do you think they should put aside on an annual basis?
I tell people double digits, especially younger people. If you're in your late 20s, early 30s, or 30s, early 40s, if you're contributing 10% to your portfolio, and you just keep doing that, you give 10% into the 401k plan, I can almost assure you, unless your spending changes dramatically throughout your life, your income, whatever happens, you're going to be in a really good spot if you can get to that double-digit saving number.
Yeah, and if you can't get to the 10% number or better, what you need to do is think about, what should I not be spending money on so I can get to that 10% number? Because the secret to success is paying yourself first. And many people neglect to do that. They think, I got to spend money on this or that to keep up with my friends or keep up with the appearances. But if you can find a way to get your income to help you contribute 10% towards anything, your 401k, your personal savings, building your emergency fund, whatever it is, take care of that first. And I feel like things will start to fall into place.
Right. That's kind of that general advice I talked about that gets you directionally accurate. It's a great starting point.
And I think that's the kind of financial advice in a language everybody can understand. That's what we try to do here at Friedman Financial, is try to keep it rational, try to keep it simple. It's not trying to chase the big winners. We want to be proper and appropriate and thoughtful as we build your portfolio, as we build your financial plan. And if now's the time for you to get serious about putting your financial plan into place or even building an investment portfolio, and likely probably the two of them together, give us a call, 978-531-8108. That's 978-531-8108, or visit us on the thing called the World Wide Web, FriedmanFinancial.com. That's Friedman.
2 E's and a D.
Financial.com. And you can go to the bottom of any page on our website, put in your name and your email address, and you'll get signed up for our free weekly newsletter. It lands in your inbox every Friday, 10:30 Eastern Standard Time. That's going to do it for us this week. We will be back again next week with more dollars and cents and financial advice in a language you can understand. Have a great day.
During today's episode of Dollars and Cents with Friedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.